Oh, here we go, kids. Yeah, that first part's a minute 32, and then it gets into a. We may take the second half, but the first minute 32 is pretty good for a short intro. All right. What are we doing here?
Oh, perfect.
What are you looking at?
The layouts for our apartments.
Which ones?
It's weird.
Rob, we got a couple of them. You're going to have to...
Yeah, the ones over in Chapman and Weiss.
Oh, okay. Are we redoing those?
Man, we should be done with the exterior paint and the upgraded electrical, and the plumber should be starting next week.
Okay.
So we're going to replumb all the houses, and Derek had to do the layout for the permits. He was a little cranky about it because it's not easy.
Oh.
So good to know that.
Yeah.
Hey, hello? What? Yeah, go grab it. Tell Brian and then tell Audra. Bye. Yeah, look at that.
Oh, let me guess. We found some money.
Found some money.
I tell you guys, ye of little faith.
The mamas came through.
Ye of
Mama
little
B
faith.
and Mama R came through. Nice.
Ye of little faith, the money always arrives at the last minute.
Retired people want to make 8% on their money. Imagine that.
I'm telling you guys.
Yeah. So that one's off the board. The next one is we got to
go ahead and fire it up, A-Rock. Let's go ahead and do the radio show.
We're not already on? Yeah.
Well, we're not doing the radio show portion. Let's get the recording for the radio. Welcome to the show. Jason Bible, Robert Orfino. As usual, we have already started the radio show 10 minutes early.
Yes.
We just failed to turn on the recording.
Keep forgetting.
So, as ye of little faith, as predicted, the money came in for the deal in the last minute, which will close next week, right?
Yep.
No big deal. So, by the way, I just want to let everybody know.
Yeah, but we have several deals. We have another one we need 150 for.
Yeah, if you guys got money, just text us.
Yeah, if you want to do first deed of trust stuff, we can.
We're doing first deed of trust. It is probably the easiest way to learn. You know what? That is probably the easiest way to learn how to do real estate.
You're right.
Is to do the first deed of trust lending
and the due diligence on that.
And
very good.
To see working with somebody who knows what they're doing. Let me put it that way.
Yes.
So working with somebody like us, it's a great way to learn real estate and earn some money on your money. So
and
281-401-9008. 281-401-9008.
Totally out of it. I should be giving that plug. Yes. If you have money and you want to invest with us, 281-401-9008 in our crowdfund, or if you want to do some loans, also reach out to us.
Like a typical loan size for us is like
$150,
$125, $175, so 125, 175K.
Yeah, the one today was 91,000.
That's pretty rare. We have them that low, but if you want a little, short-term deal, less than 2 years, learn how to do real estate. We'll focus on one asset, the acquisition, the rehab, all that. If you want to earn a little bit of money on 90 to 175,000 bucks,
come on by.
Just come to the office. We're here
just
every
come
day.
to the office. 525 Hollister, is it road or street? I don't know. 77040. Yeah. It's the big white building that
has our logo on it
and racing stripes.
Yeah, it's got racing stripes on it. Big white building, 5295 Hollister. It says Mr. Texas Real Estate on the marquee.
Right there, you can't miss it.
It says it'll say Texas Real Estate Investing Center soon, but it just says Texas Real Estate Center.
Investment
Center.
I don't want to pay for the extra 3 letters.
That's true. So that's how things roll around here. So unlike all the other real estate gurus, we have a building you can see from the freeway. Not only do we have a building, we have a building you can see from the freeway.
Well,
you can.
Just about, yeah. If you were
looking real hard.
If there was traffic.
Yeah, it's we're 3 blocks from 290, if that.
When we shoot the fireworks off, they'll definitely be able to see the fireworks.
Oh yeah, I can see the fireworks from here.
That way.
So
yeah, we love it.
Yeah, it's great.
Coming along.
Yep, coming along.
Got to get our partners to order some furniture now.
Oh,
I get that taken down.
There we go. So this is kind of like moving into you upgrade houses from like the 1,000 square foot to the 4,000 square foot house, and you're doing pretty good.
I know it well.
And you move in and you look around and go, damn, we need more furniture in here. It's looking kind of... It's like being house poor, right? It's like we can't afford the furniture, but we got the nice house.
So I hit a little personal milestone today.
Uh-oh, what's that?
So there are 3 individuals that got into deals with me that did not perform, and even though they're in LLCs and all that other stuff, and we could have just went BK and said, "Oh, sorry," I made these guys verbal promises. Hey, I'm gonna make sure you get your principal back. And 2 of the 3 are paid off today.
Oh, that's great.
Yep, 2 of the 3 are done. So there's one more person that I've made my word is my bond.
Yes.
Right? Beyond all the legal stuff, if it gets wonky, I can go BK and we're done. But we don't want to do that. So be patient. I'll get your principal back. Want to talk about insurance? Maybe we can interest. Maybe we can talk about depreciation and helping you out. There's lots of ways to make sure that I was honest and I was forthright and I was the guy with integrity. Right? Yeah. So 2 of them are done.
Great. So we got 1 left.
They both were on the phone yesterday. They're both super happy. I said, hey, man, I got to hold back a little bit for taxes, which we're going to get creamed on. I shouldn't have to pay for the taxes as well, right? Mm-hmm. So they got, I think, 94% of their principal back.
Yeah.
And if there's anything left over, we'll be able to get them the difference. And they're also going to get a negative K1, which will be a write-off.
All those guys need negative K1s anyway.
They sure do.
So
yep.
for a deal to completely go sideways and get back almost 100% of their principal.
Yeah.
And those were just crazy deals right after the crash, right?
They were just some rough stuff, yeah. So we got 2 of the 3 have been taken care of. I got 1 more to go. And we're flipping a house with the intention of paying him, and I'm selling a house with the intention of paying him. So the 3rd person that I have given that sort of personal word is bond, we'll be able to take care of here in hopefully the next 6 months, knock on wood. Yep. So feels really good when you get out of that. That stuff is not hanging over you. And again, at any point I could have just said, hey man, we're done. There's a BK, there's an LLC, I have these protections, but that's not what we do.
No.
And that certainly doesn't get us more people to feel confident to invest with us or lend to us.
So here's the old adage, right? If you're doing any investing long enough, you'll lose money. In fact, I'll tell you I won't tell you who said this because I haven't asked them if I could share this publicly. I need to. He said, he goes, look, Jason, I've borrowed, he owns a really big company in town. I've borrowed money from him personally, his company, and his family. Mm-hmm. And I know that's a pretty small circle that's borrowed from his family before. So he runs his family trust. And I shouldn't say his company's his employees' retirement.
Yeah.
I've actually invested some of that. So it's a pretty small circle that's had that level of trust. And one of the things he said to me is, he said, Jason, the first thing I ask investors before I invest in any of their deals, I ask them if they've ever lost money. That's his first question. Not show me the deal or if the deal makes sense.
How much am I going to make? Yeah.
He asked, have you ever lost money before?
Yeah.
And of course, when we were having this conversation, he knows he and I know each other real well. So I'm like, of course I've lost money on a deal. Now, my investors have never lost money.
No,
but I have absolutely. I've lost $250,000 on a house before.
Yep.
So I said, well, let's call him Bob. I'm like, well, Bob, why do you ask that? He said, well, one of 2 reasons. Either A, they don't have enough experience yet and they've never experienced a loss.
Sure.
Or B, they're lying to me. And I thought, oh, that's perfect.
Yeah.
Because if you're in this business long enough, you're going to lose money.
Yeah, 1 out of 5 flips go bad. Yeah.
That's a huge number. Mine were never that big, but that's a huge probably in
our world, yeah.
In our world, yeah. Our loss ratio, when I was running our flipping business, our loss ratio was 1%, meaning we only lost money on 1%. So every 100 deals we do, we lose money on 1.
I think within the first 5, you normally have 2 that go bad.
Oh, yeah.
Yeah, that's the rough road there.
Well, that's actually a good point. If you look at my first 4 deals,
right,
which I was doing was all my own money, I broke even on 1 and I lost $3,000 on the other, and the other 2 I made money on. So that's a loss ratio.
5, yeah.
That's a loss ratio of 25%, which is completely unacceptable.
But usually that washes people right out.
Right. I shouldn't say it's a lot. Actually, it's a loss or break-even ratio of 50%. You can't run a business like that.
So I told people I was going to pay them back, and I paid them back. I feel very, very good today. I've done everything I said I was going to do.
Yeah.
And I got one more to take care of.
It's perfect.
Yeah, that's it. So, yeah. One of the guys is a really good friend of mine. And he's talking about putting me on this board of directors thing. And I'm like, and he's like, man, I know you said it, Robert, but
I didn't believe you till it happened.
It's unbelievable. I was like, give me the wire. We're going to wire that today. Give me the wire information.
So let me tell all of you folks who are owner operators like we are, not necessarily investors. Let me tell you a dirty little secret. When a deal goes south and you make good on that deal, you will get, it might not be once you return the money.
No.
But inside of a year, typically, you'll get a phone call from them and say, hey, man, I did some deals with some other guys, and they just told me, I lost this much money. You're the only guy that when the cards were stacked against you, you actually were able to perform. Now, it didn't happen overnight, but I got my money back. In a lot of cases, they still made money. And you'll get that phone call and say, hey, I want to put some more money with you guys.
Yeah, the one guy actually made money. The other guy, we got him to break even.
Mm-hmm.
Yep. Because we said we were going to.
Yeah. That was the agreement, right?
Yeah, and it's just weird to me when I hear people that don't. I'm like, well, how could you not do that? So, anyway, this is Robert and Jason. This is the Texas Real Estate Radio Network. Make sure you guys are looking for us. We have a new website coming out soon, so that'll be at mrtxre.com. MR is in Mr. TX is in Texas, RE in realestate.com, mrtxre.com. Stay tuned. We will be back. Yeah, the other guy, he made $15,000, right? So it was 5 years. So, but he still made a 3% return on a deal that
went bad.
Horrible, yeah. So,
I'm like, what else do you want, man?
Right. It's like we did all right. So
this deal went sideways.
Yep, and we have one more guy to take care of. So I'm super excited about doing that, working to that, and then after this year, all debts are done, and then we just got 2 more years of working for ourselves.
Well, one day you're going to have to tell all those stories about business partners disappearing on you and all that.
Once we get it all cleaned up, we got a lot of stories to tell.
Got a lot of good stories.
Yep.
It wasn't, in fact, I'm convinced 90% of it wasn't the real estate. It was all the other nonsense that went on.
A lot of lessons learned. Mm-hmm. Yep, a lot of lessons learned. Yeah, we're always ready. Hey, welcome back, everyone. Robert and Jason here. We're with Mr. Texas Real Estate, and this is the Texas Real Estate Radio Network. Hey, if you want to reach out to us and talk about our crowd fund, you want to talk about some of the other stuff we have going on, our mastermind, or you want to rent some office space for us, go ahead and text us at 281-401-9008, 281-401-9008.
Welcome to the show, everybody.
Yeah, so end of the year stuff, we're just about getting ready. We got a clear to close.
Ooh.
Did you see that?
No,
they found the heirs.
Oh, did they?
They're ready to go, and then our investors like, the money's here, let's get it going.
I saw his email. He said, hey, guys, I can fund it all out of this entity now. And I'm like, okay, so somebody got paid off.
We sent them $700,000. That's how he got paid off.
Oh, that's what it was, because we sent him all that money.
We paid off his loans, and he's like, hey, now it's sitting here. I want to do it. So I think we're going to get him for 2.
Okay.
Huzzah. Yes. Yeah. And then the grandparents came through.
Okay.
So they took down one deal, and then we're just looking for one more. And I'll ask you to send out an email on it today.
Okay. Yeah, we can do that. Absolutely.
Again, and then we are. He made great progress with someone that could be very, very critical for us.
I had that conversation with him yesterday.
So that should be interesting. So if you guys are looking to invest or lend to us, hurry up, because we've got family money coming. Yeah,
family and institutional money is about to start rolling in. And it's not like, some people are, oh, man, you guys, it's like a sales tactic. I'm like, no, you don't understand. No, there's 2 things that we're always trying to do. One is, on the financing side, one is decrease our cost of capital, but it's also increase the speed of that capital. So if I can work with an institutional investor that says, Jason, I'll take every loan you've got, above $200,000 up to $5 million tranches, I'm like, I'm just going to send them to him, right? Like it just, even if the cost of capital. So one of the things that people understand, what is the cost of capital?
Let's go through that. That's super important. It's a super important lesson.
So here's the thing. Back when stock market and company valuations actually made sense, like when I was in business school before 2009, you could determine the value of a company based off something called WACC. The weighted average cost of capital, WACC. And what the weighted average cost of capital said is if two companies are the same, yet one company's cost of capital, meaning equity and debt financing, was less than the other, that means their company was more valuable.
Yes.
It's very simple, right? Mm-hmm. If your money comes in cheaper, and not only cheaper in rates and terms,
yep.
but also in speed in which you can deploy and return that investment. So the idea is that if you can work with capital partners that can churn the money quickly, mm-hmm. and you can get that, you can make that money faster. Tom used to put it this way: it's slow nickels over fast nickels over slow dimes. I want to make sure everybody understands that. It's fast nickels over slow dimes. Like I would rather churn fast nickels than slow dimes. And why is that important in real estate? Well, as everyone saw during the coronavirus stuff, like I would rather churn something faster because the faster I can churn it, the less risk there is. So there's something in the risk management world called temporal risk. It means time-based risk. So, and that's in any investment. Yep. If I can make half the money in a third of the time, I'll do it, right? Simply because the time variable is unknown. I mean, you need a lot of analytics, and we're actually pretty good at it here. Most aren't. We're pretty good at it here, kind of predicting the future. A lot of people say, oh, well, you can't predict the future. I'm like, yeah, actually you can. If you have enough observations, you absolutely can. So in predicting the future, if I can get those fast nickels over those slow dimes, we'll do it. So part of our cost of capital calculation is not just what is the interest rate, how many points, and what are closing costs and all that. It's like, how fast can I churn the dollar, right? There's a whole book we could write on how fast you can churn a dollar. So when we're looking at these capital partners, we're getting institutional investors that are now coming to us and like, hey, we'd like to buy all that. 6-7%. And oh, by the way, we'll buy it, $200,000 at a pop in a $5 million tranche, and then let's go out and do it again. And I'm like, the money, what a lot of people understand about the money world, it's all about volume.
Right.
Because the spreads aren't that wide. Yeah. So the faster you can churn the volume, the more profitable you become, the less risk you take on.
Yep.
I think that's another thing a lot of people miss in the money world. And I've talked to a lot of people that do notes and owner financing and all that, and they will tell you, like, you really only want to hold this much of this stuff because of the risk, right? You've got to be able to protect your downside when the notes are non-performing. And we've had those conversations in our conference room last week or so.
And this will be an ongoing task for us for the next decade.
Yes.
Like every year we're going to look to shave 0.3%.
Yeah.
Right? If we can just get down 0.3% each month, just in our fund, that's $160,000 extra cash.
Yeah.
And every year you strive to bring it down a little more, bring it down a little more, bring it down a little more. And so when we sit here and say, hey, we're not running a charity here. We're looking for deals and money. We're not talking about going from 10% to 3%, even though some cases that could happen. We're really just looking for that cost-weighted average capital and just sort of bringing it down. And that's what makes you really, really rich.
Well, we have not talked about our goals a lot publicly. Like our second tranche for you and I, you'll be at Disney and Dana Point, but you'll still be a part of all these organizations, is $1 billion.
Yeah.
At $1 billion, 10 bips is $1 million.
Right.
If I can shave 10 bips on a bill a year, that's an extra mil that flows through this
Even
joint.
at $150 million, it's still $150,000, right?
It's it's $150,000. I mean, it's like it's crazy. Right. It's a crazy amount of money. It employs more people.
Two Cybertrucks.
It's 2 Cybertrucks. I got to tell you this dream I had about Tesla and
nice.
Land Cruiser the other day. So, in any case, so the idea is that we can figure out what our cost of capital is, and then we can reduce that cost of capital by such a way in a way that's cost effective, in a way that's operationally makes sense. Like if I have to put a collateral package together, or Brian has to put a collateral package together, and we got to spend 6 days explaining to the buyer what that doesn't work,
no,
right?
Not at all.
It's got to be efficient, it's got to be fast, and the cost has to be lower.
Right. Using like these non-QM commercial guys, the cost of the transaction is $3,000. So you're an extra 3% on the whole damn deal. Mm-hmm. Like, this is crazy.
Yeah.
And it's taking 60 to 75 days to close. So what are we doing?
Yeah, you guys aren't really interested. What's fascinating? This is happening in what's happening in the non-QM space is what's caused us to do it in construction and insurance and all these other stuff, where we look at it and we go, you know what, this is stupid. We can do it better. Our underwriting is better. So why don't we just start selling? Why don't we look at packaging these notes up and selling them?
Yep.
Because that's all they're doing.
Yep.
So a little hint, I think people are starting to get the hint. This might be what the second fund is. But the idea is that the closer you are to the dirt, the more money you're going to make.
Absolutely.
And one of the things, I certainly understand the note business. I understand finance. I got an MBA in finance, right? But to understand how the house gets built or the house gets rehabbed or how you figure out what a patch of dirt is worth and what it's going to cost to build something that produces cash flow, like that's where the real money is. All the other stuff just is a derivative. It derives its value from those activities. So as you and I are coming up through the blue collar world of real estate investing, we understand what it looks like on the ground, but we also understand what it looks like at Wall Street. Yep. So it's just a matter of time until we end up with some gigantic fund that's really just buying and selling and trading all these notes, because we have a fundamental understanding of what the collateral in the state of Texas looks like.
Absolutely. Hey, this is Robert and Jason. We're with Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. We'll be back.
Dude, a pineapple for $2?
$2.50, $2.25 usually HEB.
$2 on sale
Nice,
at the weekly
there you
ad.
go.
I love the HEB weekly ad. I'm just throwing this out there.
So it's almost obscene that you can go in January and buy a pineapple
It's crazy.
for $2.
It's crazy, isn't
When
it?
you realize, like,
That's so out of season.
Exactly, yes, like 100 years ago,
No, you couldn't do that.
you would have to be the richest man in the world to be able to serve papaya and pineapples.
Dude, here's kiwis are 32 cents each.
Yeah, right. Absolutely. And it's amazing, right? So pineapple would be some of the richest, most extravagant food you could buy. And then lobsters and oysters are peasant food.
Yeah,
100 years ago. Oh, the peasants are digging in the sand again. Look at that.
Right.
Isn't that quaint?
Isn't that cute? But you know what's crazy? I can have this delivered to my doorstep.
Insane. What I love the Empire. We're in the Empire, man. That's it. I'm telling you right now, the Rebels don't get pineapple delivered for $2.
No. Let's fire it up, A-Rock. Let's just keep them rolling.
Did you ever make that brisket? I was looking for some barbecue this week.
I did not.
Let's get it.
Let me see what we got here.
I'm rolling with the guys on Friday, tomorrow. So you can bring us back. We'll be back here early.
Okay. Are you going to Surfside or Corpus, or
we're gonna run down to Surfside.
Okay.
Freeport.
Is it? Are we back on?
Yeah, we're on. Yep. Mm-hmm.
Okay. I saw that video that Joe's doing for my beach house down there.
Yeah.
Woo!
Looking good.
Yeah, he told me, he goes, man, you ought to be in it. He said the view from that place with the new windows is ridiculous.
Yes. Let's not tell the insurance company though.
Okay. Right. So
we're gonna have to get shutters.
Oh, that's fine.
Yeah, we're just gonna have to. I think we can hang the plywood underneath.
Yeah,
and just make sure the hooks are there.
Yeah. But it's
awesome, right?
Ridiculous.
French doors on the deck, just like I said, is amazing. Yeah, yeah, it's looking good.
I remember walking in that box and I'm like, yeah, this is cool. Then we'd sit out there on that patio. Mm-hmm. I still want to add those 4 pylons. I've got an appointment with the guys in like January, February to have them come out.
He added some for the deck. He reframed the deck.
Did he?
And put I think 4 down. Yeah.
But that's under the existing deck, right?
Just for the deck, yeah. Nothing new.
But I do want to. I've got those pylon guys scheduled. I want to say it's January, February, but I want them to have, if we can, add 4 more right there and extend that deck out, because then you'll be right there on the
he should be ready for a draw on Monday, so that's good for us. Get that thing going.
He had all of his guys over at my homestead there. They were banging away on it.
Nice.
And I will tell you this: The French drains worked real well because there is no water in that backyard. It's all in the pool where it's supposed to be.
So tomorrow, New Year's Day, we are driving a couple guys from the Mastermind are piling in the car, and we're just driving down to see a few things.
Okay, well, that'll be fun.
Yep, just walking some job sites.
What is going on?
My neighbors invited me to a little get-together tonight, and I'm like,
a super spreader event?
I'm not gonna go.
I'm
making tacos tonight.
We're gonna have a little get-together at a house. I was gonna go do something. We were talking about going to a gala. I went through all the stuff, and it's like, yeah, I got invited to.
Did you not get the warning yesterday?
I totally got the warning. I posted on Facebook. So if you guys are in Harris County, we got a warning. Let me read it to you. This is the craziest thing. I had a late lunch because I was here at the show. And let me read this to you. Sitting there having lunch. Oh, by the way, I'm a lottery winner. I'll get to the lottery winner story here in a minute.
Congratulations.
It came across. My phone does not get Amber Alerts or anything else. My phone only gets the serious, like, presidential, like the one that hacks everybody's phone.
Gotcha.
That's the only alert I get.
Martial law has been declared. Yeah,
right. So
you'll be popping that up on the 6th. Yeah.
So I'm at State Fair. I'm at State Fair in Memorial, which I've never been to State Fair. Highly recommend. Fantastic place for lunch or dinner. And get the smoky. It's not an old fashioned. It's a smoky something. And I had two of them. They were spectacular. All right. And I think they're only like $10 each. They're pretty good. This is the text I got. Public safety alert. COVID-19 surging at a dangerous rate in Harris County. Cancel all gatherings. Do not celebrate the new year with anyone outside your household. Protect yourself, your family, and healthcare workers.
Yeah.
I got that at about 2 yesterday.
I had a little bit extra on mine.
Oh, yeah?
Yeah.
What did it say?
It said, as a Democrat, make sure you're not on the streets as we will be hunting down pickup trucks.
Is that what it said?
I think that's what it said. Yeah. That's pretty amazing.
If you have a Trump flag.
Yeah. Yes, we'll be moving against the Trumps.
I finally moved my Trump flag in the garage. It's just taking up too much room in the bed.
I forget who I told that to. My little joke is someone's like, oh, yeah, man, you can't buy a gun in California. I'm like, no, you can't, but you have to go through the 2 years of mandatory training.
Yeah.
They're like, what? Like, yeah, you have to go down to the sheriff's office, and then you have to do your 2 years of mandatory training, and you run through, scenarios, and people are looking at it. It's like, and, it's just California preparing for when the red states rebel. So we're all armed citizens in California. And the guy's looking at me, I'm like, you're an idiot, dude.
You're an idiot. You're just, what is wrong with you?
But in his mind, he could see that, right?
Yeah, he's like, what?
Oh, my God.
Like, clearly you've never been to California.
I saw, and I'm going to find it. I watched a little thing last night. I saw a John Cleese little soliloquy that must be 30 years old.
Okay.
And he talked about it. He talked about social media before there was social media.
Oh, interesting.
And he basically said it's whether you're on the radical right or the radical left, they're both the same. And here's the similarities. You join a group that has enemies. And now, because you're a angry,
whatever
horrible person, you feel morally justified by attacking the enemies.
That's right, yeah.
And that's how you justify it, and this is how problems start. And I watched that thing, I was like, oh my God, that is right on what social media is. Join a group and pick on others.
Yeah.
There you go.
Although I'll tell you, the social media groups I'm really enjoying right now, one of them is...
No.
All right.
Yeah.
No. This is a good one. I'm not going to share some of the other ones I'm in. It's unpopular... Yeah, I'm not going to do that. It's unpopular car opinions, and it's all these snooty car guys, and we're just banging away at each other.
Yeah.
Like my favorite one, the guy that the last 24 hours, he posted, no decent car should be sold in the color silver. So I posted a McLaren F1, and then all these guys started posting like Mercedes SLRs, all that. So anyway, somebody posts some unpopular opinion and then just gets blown up for like a week.
Right.
So anyways, that's been one of my favorites on Facebook. It's just a trash talking group. It's great.
Right. Yeah. And the problem is we know a lot of the people that we follow, right? Like we know them personally. We're just not connected. It's not it's not the 4,800 people that we have no idea who they are. It's the 200 people we know, right?
Right.
And we're like, I know that he's trolling.
Right. Yeah.
I know that he's just trolling. I know that this guy. I'm finding out some things. Right. So it's always eye opening on that stuff.
Yeah. Just so everybody knows, and if you've been following me for more than about 5 minutes, you should have figured this out. But there have been people following me for like almost 8 years now in real estate, and they still don't get it. It's like the stuff I post on Facebook is just to get a rise out of everybody. Yeah. It's crazy. It's like when I started posting like. I don't want to even call it anti-Trump stuff. It was just stuff of a different opinion. Like I thought people were going to show up at my house and burn it down. Like, and then literally like an hour later, I post the opposite of that. And then that's how I knew the algorithms were goofed up on Facebook and why some of the things were changing for our Facebook page and why we moved to YouTube. Because you could see, I would post one thing, hour later, I'd post the exact opposite. And the algorithm knew to have it come up in the feed of the people who would be most likely to interact.
Yep.
Because it was funny. They would like, well, you're turning into a stark communist or whatever. And then I'm like, yeah, but I got an Ayn Rand quote over here. But they never saw that, right? Because the algorithm doesn't serve it up to them. Yep. So very interesting when I was tinkering around with that over the last year or so. And then started getting banned before the election. So
it's probably a good thing, to be honest with you.
Mm-hmm. Probably a good thing.
Yeah, I've sworn off a little bit. I'm just really going on LinkedIn, but there's too many bots on LinkedIn.
Yeah, and there's a lot of like what I like to call creepy networkers.
Yeah.
Hey, Jason, I'd really love a call. No, this is what they
10 minutes to discuss.
Do you have 10 minutes to discuss this? I've got some time tomorrow. I'm like, who are you?
Right. Yeah.
And no, I don't have 10 minutes to talk to some rando.
Yeah.
I also don't. I've also become. I'm developing some major disdain for professional photography, like headshots and stuff.
All right. Yeah.
Like because everybody's the same. They got the suit, they got the goofy smile, look at the camera. I'm like, I just can't do it anymore.
Yeah.
Like it's just too normie. Here you are, you're getting this random email or random message from on LinkedIn, and got the arms crossed, got the head cocked to the side. They're like exposing their neck, like they're waiting to be attacked. I'm like, this is weird. I don't like any of it.
It is. But remember, 25% of the jobs mean nothing.
It's probably more than that.
Yep.
Think how many jobs out there are not revenue based. They're all based on compliance.
I've identified one person in our office that is not revenue based.
There's only one, huh?
There's only one. The bookkeeper.
Yeah, but she probably saved this money.
The PM, the loan ladies, even the event guy here.
Yeah.
Right? They're all revenue based.
All revenue based, yeah.
Hey, we'll talk a little bit more about the Texas Real Estate Center here when we get back. This is Robert and Jason, Texas Real Estate Radio Network. Yeah, I've been very, very cognizant of we're not hiring jobs that don't make money.
Yeah, it doesn't make any sense to.
Yeah, it doesn't make us money. You get lost in, like I started thinking, okay, so we have a really good marketing guy now. Do we go, who's the next one? Do we get a graphic artist? Do we get a copy editor? And then I'm like, well, hold on, how do they make money for us?
I think that next person is, I think we really do need a publicist.
We probably do need a publicist.
We really do need a publicist.
We need an EXP organizer.
We need a recruiter. Yeah, we need a recruiter organizer.
Probably the very next person we need to hire.
Yeah.
And then we need someone to manage the purchasing for the construction.
Yeah.
Which they'll pay for themselves.
But I will tell you this. If we get a top-notch publicist, it will make us a ton of money in the long term.
No, I agree. Yep. We just don't want filler work, right?
No. Like somebody's really out there meeting aggressively.
Yep.
You know, we need that hardcore corporate A-type. You can't tell them no.
Yeah.
You know, they come to the office like they're dressed to kill. Like we need somebody like that. I think that's the next hire, at least on the marketing side.
Yeah.
Yep. Welcome back, Jason Bible, Robert Orfino, Texas Real Estate Radio Network. We were talking about jobs and who to hire and what's next, and
here at the Texas Real Estate Investment Center. Yes. Those letters just came, so we got to get them.
Oh, did we?
Yeah, the letters have come.
I loved it when we were doing the rehab in the building and the letters came pretty soon. We had like a room over here, and I'm like, what are all these letters? I'm like, oh, they're the letters for the building. And then I was waiting for the childlike humor around here.
Yes.
For somebody to start arranging the letters in inappropriate words.
Yes, absolutely.
But our PM here is kind of serious, so he wouldn't allow that kind of shenanigans
Sex
going.
and stuff,
Yeah, it's all that crazy
like
stuff.
Elon Musk, yeah.
Yeah.
You know, we sat down with the property manager today. Hey, we went through it. Hey, we've got some offices available. We've got some offices we have to turn into offices. Right now, like one of them's storage and nothing really going on over there. We've got to make it more attractive. We've got to add more lights back here. Start really analyzing because the easy ones are almost gone.
Yes.
Right? And so what are we doing with that room over there? What are we doing over here? Hey, well, let's get this one. And then the guy who has that marquee corner, he's not taking it. So now I got like the best marquee office in the building.
I'll tell you what, if this was not my building,
that's the one
I would get that office just to be across from the closing room.
Yep.
Like that's going to be such a sick spot.
Yeah.
Was it $900 a month or something?
It's $900. We're going to call a couple title companies because that would be perfect.
It is directly across from the largest conference room on the first floor in the front of the building here.
Yep.
$900 a month. It's golden.
Yep.
Even if you're never in the office and you just stick your sign in the window,
that's right.
It's worth $900.
Right. So our most offices here are the equivalent to a table at a RIA club.
Yeah. So if you're a vendor and you buy a table at a RIA club for a couple $100 a month, that's what our offices cost. But they're yours for the entire month.
They're yours for the entire month, and we're hosting the event. So yes,
it's unbelievable.
So we have a few spots left here, mostly up by outside the main learning area. Furniture should be here by the middle of the month, and our website's going up.
It's going to be great.
Creating a different website for it so that people can book events. The event calendar on there. Yep.
It's going to be good.
It's going on over there at the Texas Real Estate Investment Center.
The Investment Center. Yeah, it's an exciting time to be over here. It's the more I look at the more of the stuff we're working on for 2021. I got real excited talking to my data broker yesterday. I got real excited. I'm like, I'm about to make a whole mess with this in the marketplace. You hear that sucking sound? It's all the money coming in the door. It's going to be so great.
It's always amazing how bad vendors motivate us.
That's a good way to put it.
Yeah, bad vendors motivate us greatly, right? And I got hooked up with a guy, and it's just like, hey, I can do this, this, and this. I'm like, I'd love to see the matrix. I'd love to see the data. I'd love to see the close rates. You're talking to me about this amount of money. What is that? How does that actually work?
Yeah.
What are the performances? Give me 3 of your best, 3 of your worst. And it was just like, hey, we can do that in January. Click.
Oh, that's funny.
I'm like, okay.
Oh, so you're full of it.
Gotcha. Okay. So I'll just do it myself.
Yeah.
We're all good.
Yeah, I love the the vendors are funny when you hear those kind of conversations and you're like, yeah, man. So if you could just send over like a couple testimonials, like let me talk to a couple of your guys, and if you could tell me like how this process works.
I do it for all the biggest guys.
I do.
Who are they?
Who are your biggest
we know
guys?
them too.
Yeah, we've probably
been on stage before. They know of us.
In fact, if you could just tell me who they are, I could text them right now. And then all of a sudden, crickets. Oh, where's my cricket sound?
Crickets.
Quick, find my cricket sound. So, you're just sitting there, and then all of a sudden, it's just like, hey, man, can you send me all this stuff? And I probably know that guy. I mean, do you know that guy? I mean, he's a big player in that marketplace. No, we've not met. Maybe you can introduce me. No, wait a second. Who exactly did you?
Right, there it is. Very good.
And then that's what it sounds like. It's great.
Well, that has been our modus operandi here for the last 2 years, right?
What does that mean? Doesn't sound. Is that Spanish?
It's Latin.
Latin. Okay.
Yep. Standard operating procedure.
Yeah. Who speaks Latin? That's from Iron Man.
Priest.
Who speaks Latin? You can speak Latin?
Scholars and priests.
Yeah. There you go.
So guys, we again, we want to thank everyone for hanging with us and spending this last year with us. This has been a rough year. Hopefully you got a little wisdom and guidance out of it, or maybe a laugh or two. So we're very grateful for you guys hanging with us. We know that 2021 is absolutely bound for great things. We're super excited about all the opportunities. January is a tough month for investors. We got tax bills, we got all that stuff. So we'll be there with everyone else, feeling the pinch, doing what we have to do. And our big April 1st open house is a Thursday, We're going to line up. It's shaping up to be a pretty big event here, so we're super excited to see you guys here, and maybe even beforehand. We've got some CE classes set up by some folks, and we've got our rooms, and we've got our tenants, so all good, guys. We do appreciate everything here. Texas Real Estate Investment Center is at 5295. Is that right? 5295.
Yeah, 5295. Yeah,
Hollister.
5295 Hollister.
Yep, 77040. Take a drive on by.
Come take a look at the K-Rib.
Yep.
So, yeah, it's shaping out to be it's going to be great. It's going to be fantastic.
I was talking to someone in California about what we're doing here, and he went nuts. And he's like, that's like an artist in residency? I'm like, kind of. I was like, but they're all here. He's like, that's amazing. And he's a money guy too.
Yeah.
So he's like, let me think about that. Do I need to hire someone, put him in that building? I was like, probably.
Yeah, you should.
Probably. Yeah. He's like, I bet I could raise a lot of money. I'm like, of course you could.
Yeah.
Yeah, absolutely. So we'll see. I think we're still missing some people who don't even understand what's happening here. So we're going to hit them up, and when they start coming through the building, I think they're going to fall in love with this stuff.
Yeah, it's hard not to. You know what's amazing is even before the rehab, I'd bring people in, and you'd walk them through, and they'd say, I didn't think it would be this nice. And then I'd tell them, we haven't started the rehab
We haven't
yet.
We don't even have the furniture in yet.
Yeah,
so,
and it's like, and now they're walking through, and they're like, this place is going to be incredible. And I'm like, and you can have a spot here for like a couple $100 a month.
Yeah, nothing, yeah.
So you want to be on board with that or not? I mean, wait till we start the events here. This is going to be the place to be. Here's the problem about being here. I can tell you what the problem is going to be. Yep. There's going to be so much foot traffic in here. It's going to be, you're going to have to spend your time sorting. Like I fully expect, because we do the showtime during lunch here, I fully expect our problem to be, because this isn't soundproof glass, somebody's going to have to, the person sits at the desk going to have to shoo people down the hall. It's like, you're too damn loud. Go. They're doing the show right now. So, and we'll have some bench seating, some stadium seating set up here so you guys can watch the show. But yeah, it's going to be, it's going to be the hub. People need a place to meet. Yep. Even in 2021, they're going to need a place to meet, even if it's just to pop in.
They sure do. Yep.
And I can tell you, most of you real estate investors are probably like us, who are a little bit more old school. And it's like, yeah, you can work from home, you can do it online, but I sure do like showing up to somebody's office and have a physical meeting in a place they work, right? A place they live, to get, issues sorted out or just have a conversation, that sort of thing. So I'm really excited about all the stuff that's going on here.
And it's filling out nicely. We're still looking for a home inspector. I think they'll do very, very well here. That for sure need a home inspector. And not sure if an appraiser will do well here. They'll get tackled. They like to be anonymous.
Yeah.
But definitely a home inspector is probably next up. And then even an HVAC guy. Maybe a maintenance guy who has a little contract for some of these stuff. But, hey, this is Robert. This is Jason. Thanks for listening tonight. This is Texas Real Estate Radio Network. Happy New Year. We'll see you in 2021. That's 4, right? Easy peasy.